The day started with another sharp sell-off, the Dow dropping nearly 1,200 points amid global concerns that US tariffs could torpedo the economy. The Dow and the S&P 500 yo-yoed throughout the day, closing slightly lower than where they started.
Crazy.
On Monday, President Trump doubled down, shooting down speculations of a reprieve and even threatening more tariffs on goods from China.
Everybody is in a hot water. I don't know where it is going.
The way the market is going, so I think this is a clear sign that he's making the wrong decisions, is losing support.
These investors say they were already bracing for an impact in view of the rising trade tensions.
I transferred some of my investments into bonds.
I've, sold some of the riskier ones. Took some profits where I could, but in general terms, I had no idea how quickly this would come, of course.
Goldman Sachs has increased the odds of a U.S. recession to 45%. Still, experts tell CBC if there is a recession, it could be short-lived and the markets could bounce back in the long term.
Some people see this as a time to flee because of the anxiety, and other people are seeing this as a huge buying opportunity, and that's why we're seeing markets bounce around quite a bit.
We're going to get through this. Just like we did in the pandemic, just like we did together in 08 and 09.
A sentiment shared by some investors.
As all the tariffs sort themselves out, then the markets will come back up. So I'm investing for the long term, so I'm not too worried about the short term.
Still, the volatility is proving difficult for retail investors, particularly those planning to retire soon.
I know the pension plans, they all invest money in mutual funds or whatever, and if that goes down, I could lose my pension.
With weeks until the federal election and Trump doubling down on tariffs, voters say there's little the major parties can do to steady the stock market. Still, they're watching the situation closely. Sohrab Sandhu, CBC News, Vancouver.